Hey Sam, how's it going?
Good. Happy to be here. Thanks for having me.
Awesome. I'm happy to have you here. I'm looking forward to this call, this talk because I've read your report, I've read your content, and I feel like there's so much there to learn. And I have a chart on my screen here for anyone who's watching. I have a chart on my screen, and I want you to go a little bit deeper into it to explain what exactly we're looking here, what we're looking at here.
Yeah. So, I basically looked into the relationship, I tried to quantify it between global liquidity and Bitcoin's price. And, there's been a lot of awareness around the relationship. A lot of people have brought it up over the years of, hey, look at different measures of liquidity. Bitcoin seems to respond or move in the same direction of global liquidity conditions. And
Can,
really,
can
it
you
goes back
can you
to.
explain what liquidity means? Sorry, I don't mean to interrupt you, but can you explain just because my audience, I want them to follow along.
Sure thing, sure thing. Yeah, so liquidity, I mean, you could think about it, there's lots of different ways to measure it. We looked at global M2. And so global M2 is basically a broad measure of the amount of money sloshing around the system. It's a measure of the money supply. It contains things like physical currency, checking accounts, saving deposits, really anything that's readily available, all the cash that's readily available to spend, invest, and lend in the global economy. And so, you could just think of global liquidity as the amount of, you could think of it as money creation happening in the economy at any given moment. And we chose global M2 as the measurement. There's a lot of different ways that people choose to measure global liquidity. It can get really kind of complex. People have proprietary liquidity measures that they sell because there's lots of different ways to measure it. But we chose global M2 because it's readily available data, first off. And we think it kind of captures more broadly the amount of money that's being created for two reasons. One, we think global M2 is a good way to measure it as an M2 money supply because it is the most readily available cash. And then B, it's denominated in US dollars. So US dollars are important because it's the global reserve currency. It's where a majority of global trade happens. There's also a ton of US dollar denominated debt. And so global M2 captures the strength of the dollar as well as the amount of money getting created into the economy. So it's kind of 2 in 1 in the same metric. And so when dollar strengthens, it makes that US dollar denominated debt more expensive. And so people have to use more dollars to pay off their US dollar denominated debt. And so it sucks liquidity out of the system. And so if there's a strengthening dollar, if global M2 is falling, that's a combination where you have liquidity getting sucked out of the system. And typically asset prices, including Bitcoin, don't perform as well when liquidity is getting sucked out of the system. So that's how we decided to measure it. And I mean, I'll kind of stop there and maybe we could kind of go into the relationship a little bit more.
Yeah, absolutely. That was a great explanation. So what's the explanation? What's the relationship here? Why is there such a strong? It seems like there's such a strong correlation between Bitcoin and the global liquidity in 12-month periods, and then also with the S&P 500. I don't know. Sorry, what's VT?
VT is like a global stock index. So
Oh,
not just
VTSAX.
US, global. Yeah.
Ah,
Yeah, so like our view going into this, our hypothesis was that Bitcoin would be the most closely correlated. It not only showed a strong magnitude in its correlation, but it moves in the same direction of global liquidity 83% of the time in 12-month
mhm.
periods since 2013. And the reason being is that risk assets tend to do well in pro liquidity environments. When there's more money printing, investors tend to adopt a more risk on approach. They shift capital away from safe haven assets into more high risk, high reward assets. And so typically risk assets like equities in the stock market, as well as Bitcoin, I think more broadly, Bitcoin is still viewed as a risk asset in terms of where it is in its adoption cycle. So we thought that Bitcoin would actually perform well in pro liquidity environments. But, stocks, there's other things that drive stocks outside of Bitcoin. And that's like earnings, right? Dividends, as well as there's like passive flows from retirement accounts that kind of lead to maybe it not being as strongly correlated with just purely liquidity. Because even when liquidity is coming out of the system, you have those other factors driving the price, and as well as like those passive flows potentially buffering the price of stocks, even when liquidity is getting leaving the system, because they're price insensitive. Those passive flows buy every single time, no matter if the stocks are falling or rising or liquidity is rising or falling. So there's other factors driving potentially stocks. Bonds are viewed as like a safe haven. So we thought that correlation would be very low with liquidity. As liquidity comes out, people usually flood to quote unquote safety of treasury bonds and such. And so it's actually, we thought the relationship would be almost like inverse. And then gold, although it's scarce and it kind of benefits from a pro-liquidity environment as well, it's also seen as a safe haven. And so same thing where when people are fearful and liquidity is getting pulled from the system, which is usually bad for asset prices, some of them are going to flood to gold in that environment. So we thought that it has kind of a mixed relationship with liquidity. But Bitcoin has a kind of, the best of both worlds, all of its characteristics. It's more risky. It's a fixed absolute supply, so it's very scarce. It doesn't have these other factors driving it, such as equities in terms of the earnings and dividends. And so we thought it would be very closely tied to global liquidity conditions. And that's what the data bore out as well. And so, if you're a trader or if you're a hedge fund manager and you just have like a view on global liquidity more broadly, if you're like, hey, I think central banks are going to be cutting rates, I think money or lending standards at the commercial banks are going to be easier. If I think that the government's going to keep spending and running massive deficits, if I think more broadly liquidity conditions are going to rise, then Bitcoin is probably the best way to play that trade because it's the most tightly correlated to global liquidity conditions. And so, that's kind of the overview of our hypothesis as well as the findings of our data.
So I read something that it said Bitcoin and MicroStrategy are basically, Bitcoin is a long, a long currency trade, I guess you can say, and then MicroStrategy is a long currency trade and a short currency trade. Have you thought of that? Have you looked into that?
No, can you maybe explain it a little bit more?
Absolutely, because basically what they're doing is they're shorting the US dollar and they're buying Bitcoin. So what they're doing is they're shorting the weak currency, the thing that they think is going to decrease in value over time, and they're going long on the stronger currency. I also think
they're borrowing, right? So
you.
like, anybody could do that too. Like even an individual could decide to, it's quote unquote speculative attack. You're borrowing in a currency that you think is going to lose purchasing power over time to buy one that's going to appreciate in value. And so, I could see why that MicroStrategy could be seen doing that.
Yeah, and I think that's gonna actually think that could break the current system, because what reason do I guess there are definitely reasons for it, but what reasons do people have to purchase bonds anymore? There's the safety, the security, they call it risk free, but I don't really think it's risk free. But have you considered that maybe Bitcoin could completely break the bond market and just completely throw everything off? Go ahead.
Look, if you look at the sovereign debt market, I think that's where the bubble is. And I think that's where there's a ton of misallocation of capital given the last 10 years of ultra regulatory requirements forcing institutions basically to buy up these treasury bonds. And so, I think that Bitcoin kind of sucks capital away from them, which could be a problem for our government because that would put pressure on yields where yields will go up. Yeah. So there's been a lot of misallocation in the sovereign debt market. And so I do see, I don't know if it's going to break it because there's a lot of different ways that they can keep that, jig going in terms of changing regulations to require more institutions to buy it. And there's different, there's some demand for treasuries, in terms of their principal protection. And, people have major life events coming in the future. It's important for planning to have basically a fixed coupon and then a principal protection if you have you're going to have to pay for college in 5 years or 10 years. There's reasons to have fixed income. Now, the idea that it's risk free, I think, is really getting challenged over the last couple of years because of the inflation risk and interest rate risk associated with it. And so you have to think about that. It's not risk free. Bonds absolutely got destroyed in 2020 or 2022 with stocks. So they both fell together. And so that's a big problem because the way that portfolios have been constructed over the last couple of decades is around this inverse relationship between stocks and bonds. In periods of rising inflation, what you often see is that correlation flips positive, and stocks and bonds will fall together, and bonds will no longer serve that purpose of being a buffer to stocks. If they fall, bonds fall with it, then you don't have that uncorrelated nature and diversification that comes with it. And so you have to think about alternative assets, ones that move differently, ones that perform well in periods of elevated inflation, persistent inflation. And usually that's hard assets, scarce assets. And if you look at the data, historical data over the past 5 years, 4 years, whatever you look at, Bitcoin has been very, very a good addition to a portfolio, even in small sizes, in terms of the risk-adjusted returns. And so, yeah, I think that Bitcoin's going to take capital away from the debt market. I think it doesn't have counterparty risk. You actually just saw a really interesting paper it's notable for two reasons. One, it was written by two employees of the OCC, which is a bureau of the Treasury Department. And it found that there's increased cryptocurrency adoption in countries where there's increased risk of sovereign default, as well as rising inflation rates. And that's specifically in emerging markets. But it really flips the narrative on the head that this is only used for criminals, it's only used for fraud and terrorist financing. This is used by individuals in these countries to protect themselves against the risk of economic instability as well as currency instability. And, so when you think about the risk of sovereign defaults, maybe less in the United States, but more in these more risky countries, these emerging markets, Bitcoin is being used as a viable alternative. And, that's really exciting to see, at least for me. I mean, that's one of the reasons why I think Bitcoin is so exciting. It's a viable alternative for people for protection against reckless monetary and fiscal policies.
Yeah, definitely. I don't. So I see your point that you're making for short-term bonds, maybe 5-10 year. But is there a reason for 30-year bonds anymore? Do you think people will use those to save for the future? I think. I mean, maybe I'm wrong here, but I think that the 60-40 bond stock split is done.
Yeah, like I don't really see the need for it. No, not at all. Like I wouldn't buy. I wouldn't give my money to a government that's this highly indebted for the next 30 years at these rates. I think the long end is extremely mispriced, which is why, I do think interest rates will rise on the long end because, people will demand a higher term premium for holding like a longer dated bond. Specifically, like even outside the United States, these other countries are even worse shape. And so, yeah, I don't really see why somebody would choose to do that. Again, it's like mostly requirements for these commercial banks to hold a certain amount of quote unquote safe reserves, as well as like pension funds are required to hold a certain amount of quote unquote safe assets. And so what they can do is they can do things like your yield curve control. They can do things like increasing the requirements for these institutions to buy these bonds. Maybe stablecoin issuers become a big source. You've already see that kind of with Tether and Circle with how many treasuries they're buying. And so there is like different avenues where there could be demand for these long dated bonds. But in terms of the actual just like free market choosing it, I mean, I think they would have to use their tricks to kind of control the yield as well as artificially create demand for them.
Yeah, I think even Tether is buying short-term bonds. From what I know, they're buying what are they called? I think they're notes or
bills. Yeah.
Bills,
I think you're right, because Paulo was asked like, would you ever buy a long-term bond? And he was like, no.
Yeah, it doesn't make
Why would I do that?
It doesn't make any sense, right? I mean, if you look at I just pulled it up, the 30-year Treasury bond, the rates, it's skyrocketed.
Right.
It's tripled. And I don't even think this is all to do with interest rates going up. I think it also has to do with less demand, fewer people wanting. No, go ahead.
Yeah, I think it's less demand. I think you saw those yields really rise in response to the Fed's first rate cut.
Yeah.
And so I think it's also like inflationary pressures, and long term people are feeling like the monetary policy as well as the fiscal policy, it's unsustainable. It doesn't make sense. And so you really started to see those long term yields rise with the first Fed cut. And
Yeah.
a lot of people question, like, why are they cutting rates? I mean, you got the unemployment rate still near, historic lows. GDP growth is still at like 2.6%, I think, according to GDP now. The economy's still looking strong. Unemployment rate's pretty low. Inflation is still above its 2% target. I mean, I guess they're just kind of accepting a slightly higher rate of inflation. And so why did they cut rates? I think it's related to the fiscal side of things, but that would question Fed independence, which is a big no-no.
Can you go into that? Why do you think they cut rates based on the fiscal side of things? Do you think it's because the U.S. government debt has gotten so big?
Yeah, I mean, national debt's crossed $36 trillion. The interest expense is one of the largest line items now for the government. And, it's a situation where when the debt gets this high, the Fed keeping interest rates elevated actually leads to increased inflationary pressures, which affects their mandate of price stability. So it's kind of like their interest rate tool to fight inflation is no longer effective when debt levels get this high, because as they raise interest rates to bring down inflation, the fiscal deficits just balloon and there's more government spending because they have to spend more on interest expense.
Yeah.
And so it's kind of like it's kind of backwards, but the Fed lowering interest rates actually reduces the interest expense for the fiscal, like the treasury, and that will lower the fiscal deficits potentially, which I think is actually one of the main drivers of the inflation that we're seeing is the government spending. So they could actually be fighting inflation by cutting interest rates, but it's completely backwards thinking than what they've typically done, over the last 30, 40 years.
It seems almost like an incentive for governments to spend more because they know that, our debt isn't going to grow as fast. We don't have to pay as much interest. If we just keep spending, that's perfectly fine. And maybe they'll use this. Have you ever considered that maybe they'll use this almost strategy to accumulate Bitcoin?
You mean they
just going into debt?
Well, yes.
Yeah.
I think that's what they should do. Personally, they're doing all these other workarounds. So if you actually read Senator Lummis's Bitcoin Act, they give like two ways to fund the whole thing, which is the first one is to revalue the gold certificates. And so, in 1973, the gold certificates were marked at $42 an ounce on the balance sheet, and it's never been updated. It's like they made a statutory law they're going to keep the price there because they didn't want to like change, influence the market of gold because it's no longer like a big part of the financial system now that we have fiat currencies that are free floating. So they just wanted to basically sit there inert on the balance sheet and not respond or not be like, not do fair market accounting on that gold. And so Senator Lummis is like, well, why don't we just mark those gold certificates up to the current price level of like 2,600 or whatever gold's at, take the difference and then buy Bitcoin. So it's basically an accounting trick. And I guess that they can do that. But that could probably like cause some issues and be very complex. And then there's the other option, which is they say, hey, we're going to take the Fed net operating profits from the Fed, the remittances that they usually pay to the Treasury every year from their operations, basically profits that the Fed makes from seniorage. And we're going to give that to the Treasury, but we're going to use the first like 6 billion or something to, buy the Bitcoin with. Now, the problem is that the Fed has been operating in the negative for like 2 years because the Fed holds all these bonds and they jacked interest rates up on themselves. The bonds lost a bunch of value, but they still have to pay out to the banks, at the interest rate level. So they pay out 5%, but then all their bonds lost all the value. And so they basically are operating at a loss for the last 2 years. So there's no profits coming from the Fed to pay for this. And so I think it would be an easier, choice to just say, print the money. We have the money. We're printing money on a bunch of other stuff that's completely useless. There's a ton of misallocation of capital. We're printing trillions here, trillions here. why not just, go into a little bit of debt to actually acquire an asset that's going to appreciate in value and be a long-term solution instead of, borrowing money to do a bunch of other stuff that's usually wasteful. And so I think it's actually a viable option.
Yeah,
Now,
it's
do I
just
think they would do it? I don't know. It's very bad OPSEC, and it it could be a very a lot of scary headlines about dumping the dollars for Bitcoin, and
yeah.
I don't know if they'll actually do that, but it's probably what they should do.
I think it's just the difference between productive and unproductive debt, right? The debt that they're taking on right now is not productive. As much as we want to support people who have retired, as much as we want to
Yeah.
support with Medicare, Medicaid. Well, I'm in Canada, but as long as you guys want, as much as you guys want, it's not really productive because you're not creating new value. I mean, of course, you're supporting the medical system, you're supporting the pharmaceuticals industry, but in reality, it's not creating new value that you can rely on to grow your country in the future, which I think Bitcoin will do, right? If they diverted some of those funds into Bitcoin, I think that could actually make a massive difference, and it could actually help people over the long term, even newer generations. Right now, all they're doing is they're transferring value from Gen Z, Gen Alpha, to baby boomers and anyone older than 60.
Yeah, these like entitlement programs, and they're required by law. They would require
Yeah.
like congressional pieces of legislation to, uh, change them. So, yeah, I mean, I agree. I mean, I think there's a lot of unproductive spending from the government. I mean, I saw some statistics that every $1 of debt creates, I think, 50 cents of GDP growth now.
I saw that too, yeah.
And part of the reason why is like because when the debt gets this high, you're basically printing money, borrowing more money to pay off existing debt. Like ideally, you'd borrow the money and then use it productively in the economy very efficiently, which never happens from the top down with the government. But they would use it efficiently to like build things and like infrastructure to help increase GDP growth. Energy, like that's how you actually get a productive return on government spending. Now the problem is that like I said, like top down, it never works that way. It's always better when the people allocating the capital are the people on the ground who are actually responding to their own desires, their own needs of the community, and their own investment, their own choices. This is human action by Mises. That's always better than a government trying to come down from the top and saying, we need this, we need this, we need this. That's how you get a complete misallocation of capital. And that's why the government's the worst spender of capital. It makes no sense. I mean, you're basically just like, spreading out the money, throwing it at the wall, hoping that something sticks, instead of people actually responding to their own needs and making decisions, investment decisions based on the needs of the community, because they're on the ground, they're entrepreneurs, they're allocating their own capital. That's always better. But now we have the government kind of sticking their hands in everything, and no wonder why we're not seeing a lot of the growth that we want to see. Our infrastructure is falling apart, yada yada yada. So yeah,
Definitely. I want to ask you, do you think that this cycle could be different from previous cycles? The previous cycles we've seen diminishing returns. Do you think that's going to happen this cycle as well? Or
look, I get the diminishing returns argument because it's just like law of large numbers and it takes more capital. But I also think of that S-curve adoption of new technologies, and I do think we're like right on the precipice, and we're so early in terms of this like institutional money coming in, and all these developments that still need to happen. I mean, we're talking about like MicroStrategy. MicroStrategy is one company, really, in the S&P 500s who's making this much noise. We have like one small country who's really leaning in, maybe two with Bhutan and El Salvador, into Bitcoin. There's chatter of some. Do you still got me?
yeah, I got you.
Okay.
I don't know what happened there, but you got
Timed out a little bit.
Yeah, you got timed out a little bit there, but you're good now. I guess we can go
Yeah,
back
I mean, there's chatter of sovereign wealth funds. We're just getting into like the RIAs. The launch of the ETFs have improved the accessibility to gain exposure to Bitcoin for some of these organizations that just can't buy spot Bitcoin from a investment mandate reason or regulatory reason. And so we're early. Like that's the that's the story. Like we really are. And so there's a lot of capital that still needs to Bitcoin's going to like suck into it, into itself. And so I think it's possible that we do see like kind of a break of this cycle. I mean, there's so many things that are different in terms of the infrastructure, in terms of the big players that are getting involved now, some of the largest financial institutions, the regulatory environment, like some of these things they've been pulled forward much faster than I thought. I mean, Bitcoiners have talked about some of these things, but even I am surprised with, major governments talking about a Bitcoin strategic reserve. Like it's wild. It's wild. So yeah, I wouldn't be surprised if we continue to see diminishing returns, but at the same time, I also wouldn't be surprised if we see, this cycle is longer than typical. I don't think we're going to see as big of drawdowns. I think maybe we see 50% drawdown, 60% drawdown, but I think there's factors now at play in like a different investor base where we won't see the 80% drawdowns. And I think the price can go a little bit higher than people are expecting.
Yeah, I think so too. I'm actually surprised that people are basing they have a conclusion based on 3 cycles, 4
Yes.
cycles. What is it? 4 cycles, I think.
Small data set.
Very small data set, and things could completely change. That's 1 year or 1 cycle is 20% of the data, and that's a very, very, very small data set, like you said. But I mean, over time, things could completely change. I think that the nation state adoption alone, I mean, that could just completely change everything. What do you think are the chances that the U.S. government actually adopts a strategic Bitcoin reserve?
I think they will eventually.
Yeah.
I think that's just game theory.
Yeah.
I think it's going to take time. I think, when President-elect Trump takes office, there's going to be a lot of things to address. I mean, the budget is one thing. He's going to walk into office and there's probably going to be some kind of big budget problem going on again, like at this debt ceiling, like we had like a couple summers ago. And so I think it's going to take longer than maybe people think, but I think it's inevitable. And I think there's a lot of push. We've seen not just the White House kind of turn more pro Bitcoin, but also I think we're going to see the appointments of leadership at the regulatory agencies be more pro Bitcoin. I think the House of Representatives is more pro Bitcoin after the election. The Senate's more pro Bitcoin after the election. So in terms of a piece of legislation actually getting passed, I think now's our chance over the next 4 years to actually make that happen. I think Bitcoin's going to be a big part of that. And I think there's going to be different game theories play out. Like other countries might front run it, announce something before it. That'll kind of, light a fire under the United States politicians. You never know how these things are going to play out. But look, it just makes sense to adopt Bitcoin as a treasury reserve asset. It is pristine collateral. It's an amazing reserve asset. I mean, it's 24/7 liquidity. There's no counterparty risk. It's global. It has the inflation protection built into it due to its unique characteristics and its scarcity. So for all those reasons, I mean, and then it's also kind of like, if you want to be the leader of the potential future monetary system, it makes sense to get some. I mean, you might want to get some in case it works out. I think Hal Finney said that, or Satoshi. I can't remember which one.
Somebody said it, yeah.
Yeah. And so like, the country that moves first will gain an advantage in the future. And so I think if the U.S. is smart, they will go forward with this. But yeah, I just think Bitcoiners, I said this is happening faster than I thought, which is good, but Bitcoiners always want things to happen like right away. And these things take time. Like the ETFs is a perfect example. There's some, like we thought it was going to happen every year for the last like 8 years. And we knew it was going to happen eventually. But it took a while. So
Yeah. Yeah, it just takes time. I think it's a good thing when it takes time though, because it builds a nice foundation where you have more and more people who understand the asset. You have more people who have time to take a look, a deeper dive into what it is. I know a lot of people who they're extremely wealthy. They haven't even started looking at this yet. Eventually they will. Who knows when? I mean, I think it's a good thing if they don't look at it until later, because that's just it's more of a wealth transfer to the people who I think the younger people are the ones who are looking at it more at this point, and they're doing a
Yeah.
deeper dive, right? So it's almost like a wealth transfer from the older generations to the younger generations. I actually think real estate is one of those things that is going to be massively impacted by this. I think that house prices could drop significantly in terms of Bitcoin, and that's something that a lot of real estate investors don't see coming at all. So the,
Yeah, real estate, it's been used as a store of value.
yeah,
And it's not the worst store of value. I mean, it's pretty scarce. But I think Bitcoin's just a better store of value. I mean, it's digital capital. And so you think about all the problems that real estate has in terms of being a store of value. It's illiquid. There's maintenance costs. There's idiosyncratic risks associated with each piece of real estate. Something could happen to the neighborhood, natural disaster, fire. You get property tax every year. It's not the best for like just storing value. It's very illiquid. You can't pick up and move with your house. There's all kind of things. And so in terms of the monetary premium in it, it's a shame because obviously people need homes to live in, and the younger generations have been priced out of real estate, which harms things like their ability to start a family. People are delaying these major milestones because they feel like they need a house to have like kids and do these things. I mean, it's a cornerstone of the American dream to own your own property. It's very important to feel like you have a piece of land in this world that you own to start a family and things like that. So, and unfortunately, the prices of real estate have been increasing dramatically because there is no store of value because the money's broken. And so you have investors that are just like, hey, like Michael Saylor talks about this, and he just did an interview with Natalie, and he was talking about how he's like, he has friends that just like land bank, where he's just like, yeah, I just keep buying houses, just nobody lives there. I own 14 houses because I don't know what else to buy, and those 13 of those houses could have been families. And you really, if you talk about GDP growth and the health of a society, it's if people are having children, right? And then that's really important because when people have more children too, they start to think about the long-term future of the country. They start to really care about, what's going on in DC and the laws. And, it's like we want to build a better future for the children. If nobody's having children, nobody cares about that. So it's just like complete short-term thinking. And there's a lot of these second order and third order effects to the real estate being used as money. And so I do think that monetary premium is going to get sucked out into Bitcoin just because it has better characteristics and properties. And that's a good thing. And I don't know if you saw like CNBC, it was really interesting. Andrew Hones of Battery Finance. I don't know if you saw that clip, but they're doing really interesting things where they're actually combining collateral of Bitcoin and real estate in loans, which is really interesting because
I didn't know about that.
it's almost like Trojan horsing Bitcoin into the credit markets. And there's reason why that's important because when developers are dealing with the increased costs of development and they have to finance their projects and build out homes, and inflation is increasing their costs, typically what they do is they transfer those increased costs in the form of higher rents, which is a problem. But now if they finance, say, a project with 90% of the collateral is just whatever the building that they're building, and then 10% is Bitcoin, and they share in the price appreciation of that Bitcoin over the course of the loan, that's really interesting because it's good for the lender because the lender has less risk on the downside because they're not just the risks I talk about with like, hey, I'm going to loan out a bunch of money for somebody to build a building. Well, there's a bunch of risks that I talk about like a fire, a natural disaster, but now it's a blended structure with Bitcoin. And so that's better for the lender. And then for the borrower, you got that inflation protection. And so you have like access to the appreciation of the Bitcoin. And so it's a good thing because then it's less, they have less incentive to raise rents on people and make the housing more expensive. And you're kind of Trojan horsing Bitcoin into the credit markets, which is a huge opportunity. I just think it's one of the more brilliant ideas I've heard in a while because it also force holds Bitcoin into these long-term loans, the 10-year loans, 15-year loans. And so you're kind of like sucking Bitcoin out of the market and sticking them into these long-term structures, these credit structures.
Yeah, you're bringing future consumption into the present to buy Bitcoin. Future consumption from 15 years in the future. You're buying Bitcoin with it. I mean, it's just going to make the price skyrocket.
It's cool. I mean, it's a really cool, and it's cool because like he's like, that's an apartment complex, but no, that's a Bitcoin backed apartment complex. That's a Bitcoin building. And then you can just picture a world where like every loan requires, I mean, it just makes sense to have a tiny bit of Bitcoin to supercharge that loan, to decrease the risks and improve the, return profile for both the borrower and the lender. Really interesting. But anyway, because why that's interesting, like I said, to go back to the real estate thing, is actually in the long run, it's going to make housing less expensive and more affordable, which is great for, the broader society.
Yeah. One of the things that I have, I get a lot of comments about, because I constantly talk about real estate. I constantly talk about real estate prices are going to go down a lot. And I think a lot of people can't picture prices go down to 1 Bitcoin, let alone 0.1 Bitcoin or 0.01 Bitcoin at some point. I mean, I think it's inevitable. And people just don't get it because they think real estate has this utility. You need houses to live. You can't live without a house. You can't do anything. You can't build a family without a house. But I think that there's something missing there. Are you able to explain your thoughts on that?
Well, people do need a house. That's fine.
Yeah.
I think our argument is just that most of the rise in prices, which has just gone straight up, is related to the money printing that we've seen and just scarce assets in general going up. And that's beyond its utility value as a shelter for a family. Yeah. It's mostly a monetary premium because people don't know where else to put the money. They can do it in stocks, they can do it in real estate. Real estate's not a bad place to put the money. And so I think what we're saying is that Bitcoin just offers certain benefits over real estate as a money, as a store of value, and it'll suck that monetary premium out. And then Bitcoin has one major difference that I haven't mentioned. It's that it's an absolute fixed supply. You hear that a lot. It just means that as more demand comes to Bitcoin, there's no response on the production side of things. Like nobody can make more Bitcoin in response to that increased demand. And that's different than every other commodity or, real estate, for instance, in the world. When there's more demand for gold, there's a response on the production side where there's more mining. And then the inflation rate of Bitcoin goes up because there's more mining because gold's more expensive. So they're like, yeah, we're going to invest and start mining more. And then there's more gold that's getting mined every year to respond to the increased demand for it, increased prices. And eventually that kind of puts a cap on the price increase, right? Because there's more supply eventually. Same thing with housing. When there's a ton of demand for housing, there's a response by the market to increase development, right? There's an incentive. It's like, oh, we can make a killing. We're going to sell housing at more, expensive prices. And then eventually there's like, the market gets satisfied and the supply goes up and then, the price can't go any further because there's just a flood of supply because of that response. That doesn't exist in Bitcoin, which is incredible, right? It's never happened. So like there could be as much demand as you want for this thing. Nobody can print more of it. It's programmed, it's set in stone. So the potential opportunity there, the asymmetric upside of being that fixed inelastic supply is really unique and potentially explosive if we get this huge wave, right? And we've seen that throughout Bitcoin's history, short history, but that's what we've seen.
Have you seen this? China found a bunch of gold.
I did see that.
That's crazy, and it just appeared basically out of nowhere. Nobody expected it to be there. I don't know the details. I'm just thinking the fact that we've discovered this gold and we're now adding it to the total supply of gold, and nobody has any idea how much gold actually exists. I think that's going to change how the world sees gold.
Yeah, I mean, I see that like every couple of years there's an article like this. And then the crazier idea like down the road that everyone talks about is, hey, we're gonna mine an asteroid, right? With gold on it. Or we're gonna find something deep in the ocean or something, So like I think more broadly, what that's saying is that as technology advances and it gets easier and easier to mine the gold, that's also something that doesn't exist in Bitcoin, right? Because, Bitcoin, there's difficulty adjustment. It's the amount of Bitcoin that enters the universe is fixed. And so no matter what happens on the technology side or anything like that, there's only ever going to be 21 million Bitcoin. You hear it all the time. Can't say that with gold. You don't even know how much gold is really around today.
Yeah.
But when you see stories like this, it kind of just highlights that, why Bitcoin's different.
Yeah. Yeah, and it shows you the difference, like you just mentioned, the difficulty adjustment, the fact that nobody can change the supply of Bitcoin because of this thing that's embedded in the code that nobody can remove, nobody can stop, nobody can change, no matter how badly miners are operating. It doesn't matter. It doesn't matter if they are in a loss. It doesn't matter if they're making massive profits. Nobody can remove the difficulty adjustment. Nobody can increase the supply. Nobody can change the block subsidy, and that's what really gets me. I think that's what really makes me think that this thing is the future. The fact that it's digital gold. Gold, you can actually find more of it. With digital gold, you can't create more because it's incorruptible software, and that just makes a massive difference in how we use money, how money is created, how money is perceived. I think people will definitely have a longer time horizon with their decisions. They won't just make impulse decisions anymore. I mean, they probably will, but not as much as we see today. Today, people just want to get rid of their money, right? Even businesses, they're forced to buy certain, let's say, equipment. They're forced to make certain decisions that that aren't in their best favor just because they know that the money is going to disappear soon. So
yeah, and I mean, I agree completely. And to go back to your question, people can't imagine, one Bitcoin buying a house. I mean, I'm looking at it right now. Like over the last month, the median new house in the United States has lost 70% of value in Bitcoin, right?
wow.
And over the last year, 80, 5 years, 90. And so that's when people say life is getting cheaper for Bitcoiners when everything else is feeling more expensive for people who hold cash or assets that don't keep up with the rate of monetary inflation, which is around 6 to 8%, however you measure it. And there's different ways to measure it, but that's kind of like the M2 that I mentioned before. And so this will continue. It has continued. I mean, just me being in Bitcoin for 3 cycles now, I've seen the amount of Bitcoin that it takes to buy, an average home just continuously drop. And I have no reason to believe that won't continue because of all these adoption trends that we talked about. And it's like the scarcity of Bitcoin with more demand. I mean, it's really simple. It's just there seems to be a ton more demand and adoption continues to increase. And there's a fixed supply. And so there's only one thing to happen. This goes up.
Price has to go up. Yeah. There's no other way around it. You can't create more. You can't tell people not to buy it if they want it, if they discover what it is. Every Bitcoiner that I know, everybody who understands what Bitcoin is, they want more. And they want more. And I don't think there's any end to it. So if somebody has 1 Bitcoin, they're going to want 2. If somebody has 2 Bitcoin, they're going to want 5. If somebody has 5 Bitcoin, they're going to want 10. Right? It always is. It keeps going because you know for a fact that this thing is finite and nobody can create more of it. I wanted to ask you a question that I ask all of my guests. The question is, what do you think is the most important downstream effect of Bitcoin? So you mentioned second order, third order effects before. What do you think is the most important out of everything that Bitcoin can do as money? If we go to a Bitcoin standard as money, what do you think? How do you think the world will change? And what do you think the most important change will be?
Oh man, there's a lot of different ways to answer this. Man, there's two. Can I give you 2?
Yeah, of course.
One thing I think about is that historically, sound money has been a constraint on war, right? Because fiat currencies and the ability to print money is usually related to periods of war and the government trying to finance them. And then a lot of conflicts are related to economics, right? And so I do think of this, it's kind of a crazy thought, but I do think of this world where if Bitcoin does become this like new foundation of a global, apolitical, neutral monetary system that nobody can control, that there will be more peace in general, because there's going to be less corruption, less weaponization of the monetary system, and less ability to afford to print money you don't have to send people to war.
Yeah.
And so I think about that, and that's kind of more like long term. The other more like broad idea is something that Safety talks about, is just like lowering your time preference. And this is really important because Bitcoin allows people to save, and the ability to save is critical, in my opinion, for sustainable long-term GDP growth, as well as innovation and invention. Because when people can save and they feel like their money and their savings aren't going to be lose value over time, they start to think long term, and they start to say invest in things that are kind of crazy ideas at the time, right? Because they're like, hey, this might not pay off for like 5 years. I don't even know what this is going to do. But if this does work, this is going to be groundbreaking. Well, you can't really do that in Argentina when the money's losing value overnight. You have to think about, oh, I need to get rid of this money ASAP to go buy groceries. Like, you can't think about like funding some project for the next 10 years. Your mind can't even like think that far. It can't think past next week. And so when you have a money that allows people to save and think long term, I think that leads to more saving, more investment, and that leads to more innovation and more prosperity for just in general for society. And so it's exciting when I just think about what it means when people have a money that they can save that is resistant to debasement as well as manipulation, corruption. What will be built in the future off that foundation of savings and thinking long term. This is how, like, if you look at these really beautiful buildings and structures, and I got married this year in like a cathedral that took like decades to build, and it's like the most beautiful building. And you just don't see that today in a period of fiat currency where there's debasement, because like the idea of financing something like that, and hey, we might not even see this completed until we're all dead. That's it just doesn't happen nowadays. But like we visit these structures that people used to have those feelings of like, hey, we want to leave something with a legacy and build something that's going to be beautiful. And like, I think you're going to see more of that. So those two things are what I think about, and kind of what keeps me driven to continue to educate people about Bitcoin. I just think there's broad benefits to society that are extremely important and exciting.
Have you been to Barcelona?
Yeah.
The Sagrada Familia.
Yeah, insane. That's Gaudi.
Yeah.
Yeah, gorgeous. That's exactly what I'm talking about. Yeah, it's absolutely stunning.
Yeah.
And isn't it still being built?
It is still being built. They're still improving it. I went to Barcelona 2 years ago. They're still making improvements. They're still changing it. They're still making massive. I think they're making a lot of changes on the outside to make it even more grand, I guess.
I was there about 8 years ago or something. It's gorgeous. Wow. I mean, it's beautiful. It's one of the most gorgeous buildings I've ever seen. Like, looking up inside of it. Yep, there you go. It's so crazy. Cool. But yeah, that's exactly right. That's kind of what I'm talking about.
Yeah, who would have put the work in to make something like this now? People would just make boxes. They just make boxes. It's for the. I don't even think real estate and buildings are even promoted for their use case. They're more promoted for investment purposes now.
Oh yeah, and I think if you have if you have a good developer who really cares about their work, there's people making gorgeous homes and buildings out there. But for the most part, I think even like for me, I look at like a property or something, and I'm like, going back like a decade or two, you almost see more quality, because you can walk into like a freshly built place now, and you just feel like it's made of paper or something. Like, you can like feel it in the air, like your voice echoes, and it's like feels like it's made of paper, and you can just blow it down, because they're just trying to get these things up as quickly as they can. And it goes back to like the money, I think, and like the incentives. And they want to build this thing as quickly as possible because the costs are going up and, you know, the prices are going up. And so they just want to get this thing sold. And so they can make a return on their investment. And that incentivizes just crappy buildings.
Yeah.
Crappy homes
Absolutely.
that end up like, talk about like people buying them for an investment. It eats away at their investment because they're built crappily. So then like suddenly they have all these plumbing problems. They have all these maintenance costs that they weren't, you know, calculating into the equation when they were like, this is going to be a great investment. You know, there's tons of horror stories about that. With Bitcoin, you don't have to worry about that. It's built, it's engineered beautifully.
Yeah, it's engineered to be perfect money. I think it's engineered to be specifically the world reserve currency at some point, or the world reserve asset, whatever we call it at some point. I actually want to go back to the beginning, the first topic that we had, and I want to be respectful of your time as well. But liquidity, we talked about liquidity, we talked about global liquidity having a massive impact on Bitcoin, and now we're seeing a pullback. Why are we seeing this pullback? Do you think it's because global liquidity has decreased, or is it purely emotional?
Yeah, well, you know, it's interesting. That report with Lynn Alden and I, look, we said that Bitcoin typically tracks or moves in the same direction as global liquidity and, you know, over the long term, over 83% of 12-month periods. But there are periods where it breaks with that long-term correlation. And we talk about that. And one of those is when, you know, Bitcoin kind of gets over its skis, and you can kind of look at on-chain metrics of when there's potentially it's overvalued. Now we're not there right now. The other reason why it potentially breaks with its long-term correlation, if there's idiosyncratic events specific to the Bitcoin industry that either causes significant shifts in sentiment or lots of buying and selling. So for instance, like Bitcoin broke with its long-term correlation with global liquidity, like during the FTX collapse. Like it was not like, no matter what was happening on global liquidity conditions, Bitcoin saw a ton of selling pressure because there was a ton of fear. You know, there's like, oh my gosh, the biggest exchange is collapsing, yada, yada, yada. Similarly, in the beginning of the year, in terms of a good news event, when the launch of the ETFs happened, you know, Bitcoin's price rocketed up. Liquidity was kind of going sideways. And so that was another example of when there's like an idiosyncratic event that you can't really predict that happens specific to Bitcoin that'll break with its correlation. Now, what's interesting is, like you said, global liquidity had been going up into the fall. And I think that was kind of a driver of Bitcoin's price. But, you know, typically Bitcoin lags global liquidity by, you know, a month or two, usually 2 to 3 months. And global liquidity has been going down. But we just had this election, and the election completely, I mean, the regulatory environment is completely changed overnight. And I think Bitcoin, I think that's considered an idiosyncratic event. Like we now have Gary Gensler stepping down. We have Howard Lutnick, big Bitcoin bull, as the Commerce Secretary. We have Scott Bessent as the Treasury Secretary. He's also spoken positively about Bitcoin. Obviously, Trump's promises about the strategic reserve. You know, this is the first pro-Bitcoin administration, and it's a huge shift. And if you listen to like all these corporations that are coming out and adopting a Bitcoin treasury strategy, a lot of what they say is like the regulatory environment has changed since the election. I mean, you've seen it like 2 a day. It seems like there's like some little NASDAQ company saying that, and it's because of the ETFs. It's because of the change in the regulatory environment. So even though liquidity has come down, and the other component I didn't even talk about is the dollar. The dollar has strengthened for the last 8 weeks straight. I mean, I think it just dipped this week. And so that's another, like I mentioned, that's tightening liquidity, because if it's a stronger dollar, it makes these dollar denominated loans more expensive to pay. So it kind of, instead of these people having to, you know, could put the money back to work in the economy or invest it elsewhere, they now have to pay more to service their US dollar denominated debt. Okay. So like the dollar has been strengthening for the last 8 weeks. Global liquidity is going down. Bitcoin's ripped like 45% over the last 30 days. And so for me, this is an example of potentially Bitcoin breaking with its long-term correlations because of these very positive developments to the industry itself. Now, I could be wrong. Like Bitcoin liquidity is a huge driver of not just Bitcoin, of all assets. Like Stanley Druckenmiller said, like don't watch the earnings anymore. Don't watch this like liquidity drives the markets. And so if liquidity really starts to dry up and there starts to be a liquidity crunch, yeah, I think Bitcoin's going to, suffer in that environment. But right now and over the last, basically since the election, I do think Bitcoin's price has been driven by other factors mostly, rather than global liquidity, if that makes sense.
No, I completely agree. I actually think, just to go back to what you were saying, I even think that if there is a liquidity crunch, if there is a decrease in the total amount of money in the system, Bitcoin could still go up because it's just going to pull money from other assets.
Potentially. Usually people run to safe haven assets, which I think more broadly, you're starting to hear, like, obviously I'm a Bitcoiner, and I think there's actually nothing safer than Bitcoin because it can't be manipulated. It can't be debased. Like, all these things make it actually a very safe investment in my mind. But I, sorry, I lost my train of thought.
No worries. Oh, you were saying, the I completely forgot what you were saying. I can edit this out. No worries. How you think Bitcoin is risk-free, essentially?
Oh, okay, yeah. Okay, so sorry.
No worries.
Yeah, so people, if usually liquidity the correlation goes to 1. People sell what they can in a liquidity crunch, and Bitcoin being a 24/7, available asset that's completely liquid. If a liquidity crunch happens on the weekend or when trading hours, they're going to sell their Bitcoin for dollars if they have margin calls or things like that. So, Bitcoin will get sold off. Now, people usually flock to safe haven assets. I think, you heard the head of digital assets, Robbie Mitchnick, talk about this from BlackRock, he said, Bitcoin's kind of can thought of as a risk on asset, but it's kind of has characteristics of a risk off asset. And I would agree. And, maybe it's kind of like I hope this is happening, but it's not like my base case. But as the dollar has increased, in strength over the last 8 weeks, that can be seen as people flocking to safety as well. Same thing with gold. Gold's rip up. That can be seen as people flocking to gold as safe haven. Maybe they're looking at the debt situation, fiscal deficits. Maybe Bitcoin is starting to get some of that bid, maybe that safe haven bid. People are using it and saying, hey, like, it's gold, it's dollars, and it's Bitcoin that are calling out some of this like fiscal recklessness and the unsustainable nature of the debt. Maybe a little bit of that's happening. I hope so. Not my base case. I think we're still a little bit far off from that shift in thinking around Bitcoin. But potentially, maybe that's a little bit of what we've seen over the last month or so, or 2 months.
Yeah, I think at some point people are going to figure it out. Most of the world hasn't figured it out, but I think at some point they will. I mean, besides all that, do you think we're going to dip a little lower or no?
No, I mean, I've never seen a more fundamentally bullish setup from all these factors. I mean, it just seems like there's just so much going on that's exciting in terms of the regulatory environment. I've already talked about. Corporations. You're gonna see Wall Street really lean into this, I think, and the accessibility, all those barriers that are down for people to get exposure to Bitcoin in different ways, the amount of financial products and instruments to express that view with the options tradings going live and the ETFs and more mature derivatives markets, and then the spot markets themselves having much more safe venues to kind of buy Bitcoin. These are like highly regulated institutions. And so I'm just really bullish. Like, obviously the liquidity stuff, like if liquidity keeps getting drained, that could cause headwinds. Bitcoin also, it just, like I said, it ripped like 45% in 30 days. I mean, it's totally normal to have a correction.
Yeah,
and to cool off a bit. It's actually kind of healthy. There's a lot of like leverage going on. I think you see some profit taking from long-term holders, which is normal. People have been talking about 100K for a long time, and maybe that's their price where they sold a little bit, whatever goals they have. Maybe it's to buy a lake house. Maybe it's, people take profits. So I think there's a little bit of that. I think there's a lot of leverage getting wiped out. Some, late bullish traders going on with leverage, thinking that we're going to break through 100K on the first time and shoot to 120. And now they're getting wiped out. A lot of greed getting wiped out. Now, I think personally, like maybe we dip a little bit under 90 most, and then this is going to get eaten up pretty fast. Because, like I said, I think there's been a lot of people waiting, realizing that they're short Bitcoin, realizing that Bitcoin's not going away. And this is an amazing opportunity. And as you said, as more people learn about it, typically they want to get more of it because they realize like, wow, we had it wrong before, or wow, thing's really interesting. And there's reasons to buy Bitcoin for everyone, whether it's for the diversification properties, whether it's for a high growth innovation play, whether it's for a safe haven play, inflation protection, debasement protection. It's a great way to save.
That's it.
So yeah, I'm bullish. I think it's going to get eaten up. I think we're going to break through 100K. Yeah. And I think, like I said, my base case is that we're kind of just getting started with this bull market. It's going to be wild ride, and I think it could be longer, more spread out than people think, because of these new players entering the market. And yeah,
completely agree. Sam, I like I said, I want to be respectful of your time. I want to ask you one last question. Do you have any final tips and tips for my audience here? New people to Bitcoin, people figuring it out. Any tips as a OG, somebody who's been around for so long?
Yeah, I mean, I would just say, look, I mean, everyone's got to make the choice themselves. It's just, I've been around here a long time. There's always more older OGs than, because people have been here for 2013. So, but I feel like I've been here for a while, and there's this quote from The Art of War that's like something about watching your enemies fly by the river. Sit by the river and watch your enemies float on by. But it's not just enemies in Bitcoin. It's also friends who decided to take on leverage, who decided to get cute, who decided to go play in crypto, who decided to do all these different things when really all you had to do was be consistent, stack Bitcoin, hold on to it for a long period of time, and hodl, right? And so like the volatility can really shake people out and really screw with people's minds. So can greed, so can fear. You really want to just like understand what you own, focus on learning about your investment, focus on why you hold Bitcoin, and then steadily DCAing. So $1 or $10 a day, whatever, $100 a week, whatever makes sense for your own individual financial situation, has been shown to be a really good strategy for something as volatile as this, because set it and forget it, automatic buys. You take advantage of the volatility then a little bit, and it adds up over time. So perfect example is El Salvador, right? So like El Salvador is just buying 1 Bitcoin a day, and it's working out for them. Use them as an example. A little bit goes a long way. I think I saw something recently about some guy that's been buying like $100 a day or something for like the last 5 years, and it's worth like $1 million or something right now.
Wow.
Or something. Yeah, I'm getting the math wrong there, but it's something substantial, right? So like that's what I'd recommend: educating yourself, understanding what you own, managing the volatility through either a DCA strategy or position sizing. Don't invest more than you can afford to lose, and hold on for at least several cycles. I think you'll be happy.
Yeah, I think 4 to 8 years is probably the minimum. 4 years is probably the minimum. Maybe 8 years, 10 years, 12 years, whatever you can hold for. I think over time you're just going to build more and more wealth. Consistency is the key here.
Yeah, the exit. Yeah, exactly. And like the exit happens on the front end, right? You're dumping fiat into Bitcoin.
You're exiting into Bitcoin.
Yeah, you should be saving in Bitcoin. So like that's you're not thinking about when to get out of Bitcoin. You should be how do I get more into Bitcoin? That's what you should be thinking. Flip your mindset.
And Sam, I really appreciate your time here. I wanted you to just plug yourself. I know my audience definitely liked what you had to say here. So if you have any platforms that you want to share, I can link something in the description below, but where can my audience find you?
Yeah, right now I work on something called the News Block, which is a weekly update of everything that's going on. I think the most important stories, I think we should do a good job of curating everything in one place. So I talked about like a paper recently, like that's something that I'll share in the news block that you can read yourself, kind of curate everything. It's read by Natalie Brunell. She does a video thing of it. So you can find that at the news block at substack.com, as well as, I'm on Twitter. So I post a lot of analysis. I'll be working on another paper with Lynn Alden that's coming out soon. And I usually post that from my X account. So at Sam Callahan, it's right there, SamCallah. And yeah, thanks for having me on. I really appreciate it. And if, my DMs are open too. So if any of your listeners have questions or just want to reach out, you can DM me on X and we can just talk.
Absolutely. Thank you so much for your time, Sam. I really, really appreciate it. I know for a fact that my audience is going to go to you. They're going to love your content. So thank you.
Thank you.
Appreciate
Appreciate it. Yeah. Thanks for having me on, and have a wonderful Thanksgiving.
Absolutely. You as well.